we have actually conducted for quite large of bank and CEO levels to discuss about what is the driver and what is the pain points that banks are having in the world, and specifically in Asia Pacific. And we try to find out where is driving them from changing the landscape of payments and how this is going to apply to them on the day-to-day business in order to improve for them services in one hand, increase revenue on the other hand, be able to be very competitive to the changes that we can see that's coming out of a lot of area of the fintech companies that's coming, giving them a lot of changes. What are the clients are demanding that are missing that they needs to be adopted, and also on the same time, which are the area that they think that they needs to be improved. All right. So we find it a very interesting type of things that we are not really 100% was realized that it happened. So first of all, we realized that the issue of lack of visibilities. The bank don't have enough information what's actually going on in the transactions that they want to do. Okay. They would like to be in a position that they will have more information. That was come up quite high on the area of what they're trying to do.
They don't have visibility of their own payments.
Of their own payment and the same time of transactions. And when they make a payment, they always doesn't know exactly if it's arrived or not arrived. And if it's arrived, it is arrived to the right destination. So visibility, because for the banks, is the key is how they manage and control the whole entire process and things like that. Right. So this is one thing. Another area that we found out that the banks is looking for is speed. How fast can we actually can do this? Right? How fast can the banks is literally can get transition happening? Because is today the clients demanding real time. The clients today demanding for them to be 100% for them. They make a transaction. It's the same like they make on their WhatsApp, on their makes on the TikTok, on their make everything. They would like to see immediately speed. So speed is another area that see that they wants to be there and actually to improve the area of the what they're doing in our banks. So we spoke about visibility. We spoke about speed. Another area that we found out in banks in Asia, particularly, not whatever it is the issue of the nostro accounts, and what we also call about the corresponding banking. In Europe and the US, we know that people are dealing with limited amount of currencies. Now, in the US, where we are now, we're talking about Canadian dollars and we're talking about the US dollars. Most of the traffic happening within the banks with same currencies. When we're talking about Europe, we are talking about banks that you're talking about Euro, British pounds, some of them, Swiss francs, whatever it is, but there's a limited of numbers, and also, of course, US dollars. But when we come into Asia, there is more than 28 dominant currency with all the other things to do. There is different types of corridors between the banks that they need to do and between the countries. Banks that trading in, for example, in Southeast Asia is different from the one between in Greater China, or the trading in Japan, or the trading in the Pacific Islands. Right. The currency that is been trading is totally differently, so it required a lot of FX and convergency of currency. Also, at the same time, we have a lot of issue with related of the corresponding banks, because not all the banks in the regions are holding all the different currencies. Right. So they like to say, okay, I have an issue. Also, we saw that the bigger banks doesn't want to hold so many small banks as the corresponding bank for them. And if they're asking them to put a lot of on the nostro accounts, a high amount of liquidity for them, which they cannot do. So you see banks in, for example, in Cambodia, they're dealing with Aussie dollars, Hong Kong dollars, US dollars, Singapore dollars, and each one of them then needs to put in Cossicom Bank, for example. Each one of them in the accounts, they have to put a big lump sum, but holding them from the liquidity point of view, it doesn't allow them.
Trap liquidity.
So they would like to see